Ladies and gentlemen, good day and welcome to Kewal Kiran Clothing Limited Q1 FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Before we begin, a brief disclaimer. The presentation which Kewal Kiran Clothing Limited has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Kewal Kiran Limited business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to the management of Kewal Kiran Clothing Limited. Thank you, and over to you, sir.
Good morning, everyone. It's a pleasure to welcome all the participants to the earnings conference call of FY'25. This is Pankaj Jain, President Retail. Joining us on this call is Hemant Jain, Managing Director KKCL, Ravi Punjabi, Managing Director Cross Casuals, and Marathon Capital, our Investor Relation Advisor. I hope everyone had an opportunity to go through our investor deck and results release that we have uploaded on the stock exchange and our company's website. At KKCL, we have navigated an impressive tragedy from denim-centric origins to becoming a vibrant lifestyle brand company. By integrating unconventional design capabilities and advanced manufacturing techniques, the company has been able to offer high-quality, stylish, and competitive priced products, significantly shaping the country's menswear fashion culture through its iconic offering and established brands. This approach has not only boosted consumer demand but also ensured that KKCL remains at the forefront of fashion trends in the menswear apparel segment. In the move to further accelerate growth and solidify our position in the apparel industry across gender and age, we are today anchored by the focused and multifaceted growth strategy. In line with this, let me provide you some updates on our key strategic initiatives. First, it gives me immense pleasure to announce that we have successfully consummated the acquisition of 50% stake in Cross Casuals Private Limited, engaged in the business of women denim wear and casual wear category. Pursuant to this acquisition, Cross has become a subsidiary of our company, and we believe that this is likely to have an overall positive impact on revenue and profitability. Secondly, our recently introduced kidswear clothing through our focused brand Junior Killer started seeing encouraging results on ground dispatches and sales. We believe the acquisition of Cross for women's wear along with focused brand of Junior Killer for kidswear clothing coupled with our established brands like Killer, Easys, Lawman and Integrity will help us to get closer to our ultimate aim of creating a diversified product portfolio and transforming into a powerhouse across gender and age. Financial year 25 started on a muted note with sales of 151 crores and an EBITDA of around 28 crores. The performance was primarily impacted due to the continued slowdown in the consumer sentiments. The same got aggravated due to prolonged heat wave conditions, particularly in the North India, leading to a lower footfall during the period. The lower number of weddings also impacted the performance for the quarter. We remain optimistic about the upcoming quarters, anticipating market improvement driven by the upcoming festives and the promising wedding season. Further, the government focus on consumption revival alongside a normal monsoon are also positive indicators for the overall apparel sector. We believe the strength in the economy, supported by rising income levels, provides for a huge potential for resurgence of consumer demand in the sector. In response to the evolving market dynamics and positive potential, we are not only expanding our presence in the LFS channel, which has broadened our national footprint, but also focusing on an increased retail presence through brand-led EBO to enhance brand visibility. As of 30th June 2024, there has been a net addition of 17 EBOs in quarter one of FY'25, bringing the total to 505 EBOs, including over 350 plus killer EBOs. Furthermore, killer in-house manufacturing capabilities supported by state-of-art technology and decades of experience demonstrate our commitment to excellence. Our robust supply chain management position us advantageously in the current geopolitical climate, reinforcing our confidence in the positive future. We are conscious about working capital and don't believe in filling or pushing inventory in the channel of sales for the sake of short-term growth. With the encouraging response to our July 24 trade show for Spring-Summer 25 collection, including Killer, Yeezys, Cross and Junior Killer, we are confident in achieving the robust growth in the coming months. We will continue to diversify our product offerings, leverage the lifestyle appeal of our brand, and strengthen our position as a leading lifestyle house catering to all genders and ages. With our growth levers in place and despite a muted quarter one, we anticipate improved consumer sentiments in second half of the year. This will drive positive growth for FY'25 with an overall consolidated growth expected to be in double digits. With this, I would like to conclude and open the forum for questions. We can now begin the Q&A.
Sir, shall we start the Q&A link?
Yep.
Okay, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sameer Gupta from IIFL Securities. Please go ahead.
Hi, sir. Thanks for taking my question. Good morning. Firstly, sir, just wanted to clarify, are there any write-offs or return back during this quarter which may have impacted performance? We've added around 17 EBOs, and generally when EBOs are added, there is a large sell-in that takes place. So the growth is also despite that, the decline. So just wanted some clarification on that part.
There has not been, hi Sameer, there hasn't been any write-offs during the period.
No returns, I mean more than ordinary.
Nothing which is not in the ordinary course of business or exceptional.
Okay, got it. I mean above the provisions, I mean that's the only thing. Like no returns which are above the provisions that you generally make.
Right.
Okay, got it, sir. Secondly, sir, this double-digit growth expectation for FY'25, just wanted to get it clarified. This is without cross, right?
This is, when I said double-digit growth, it will be a consolidated growth.
So would it include the inorganic portion of cross?
That would include the inorganic portion of cross.
It would, okay. Because, fair enough. Lastly, sir, just a clarification. Now, looking at your PPT, there is a increase in the salience of others, which is largely accessories, I believe, 6.4 to 9.4%. But share of apparel volumes is also up from 60% to 70%. So, just wanted to understand this in a better perspective.
I couldn't get the question. Can you repeat it?
Got it, sir. So, your others portion, which is largely accessories, I believe, is up from 6.4% to 9.4%, the share. And the share of apparel volumes within overall volumes is also up from 60% to 70%, because others would be non-apparel, right? So, just wanted to understand what is happening.
Yeah, other would be non-apparel.
But both the salience should not be going up, right? If the non-apparel portion is up, the apparel portion should be down by a way, right? Maybe I'll take it offline, sir. No worries.
Yeah.
Thank you very much. The next question is from the line of Tejas Shah from Avendus Spark. Please go ahead.
Hi. Thanks for the opportunity. First, you spoke about Pankaj, that sentiments are bad and then demand was muted for multiple reasons. So just wanted to understand what's your feel on the ground. How soon you feel that the demand can revive? Second, last year around the same time, there was overhang of Adhik Maas, so festive season starts later and hence primary booking were delayed. Considering that festivities will start early this time and then looking at our 1Q numbers, how should we think about build up for the festive season?
Hi Tejas. I feel the quarter two, it's been a mixed response for most of the people, and the entire quarter can also be divided into two halves. So you can presume that second half of the second quarter would have a better consumer sentiments.
Okay, but my question was largely that around same time last year we had this pushback of Adhik Maas also coming through. So I am assuming that primary billing also would have got delayed by a month or so. But considering that this time it's early and some market would have or investors would have thought that you will see that on a lower base will have a better number this quarter. Is this a reflection of very tepid or very poor demand sentiment than what numbers suggest on ground?
Tejas, I still feel that quarter will be on a flat to structure. I don't think there is going to be a much growth expected in this quarter structure, but quarter three we expect a positive.
Okay. And second question was on Cross. How should we think about the synergies playing out here in terms of distribution? So, what percentage of our existing distribution versus basically Killer or KKCL's distribution is where Cross is present today, and how do we plan to ramp it up in, let's say, this year or next year?
Yeah. Hi, this is Ravi. So we have just had a trade show and we had a very positive feedback from all the customers across all regions. Since even in large format stores we are present across all regions, so the brand is already known to trade. So the results, as in the inquiries, were very positive. So first season we will take it a little slow because we are studying the market. From next autumn winter is when we will see the bigger traction.
Okay. And last one on Junior Killer. What is our go-to-market strategy and how are we trying to kind of position ourselves? And this is considered to be very hyper-competitive market, especially from B2C and private labels of large format stores. So what will be our strategy in terms of pricing, positioning and go-to-market approach, if you can share anything on that?
I think Tejas, there is still vacuum for premiumization in this category structure. Our competition is not with the unorganized sector, or I would say it's more with competition like US Polo Kids. You're priced in that category. I think there is still vacuum for a lot many brands to enter that price bracket.
Okay. And then route to market, Pankaj? Will be selling it through online, offline? What will be the strategy there?
The first primary channel would be LFS. Second would be.
Okay. And then will we put it in our EBOs also?
We have not yet planned for it. Okay. We have not yet planned for it. Okay. The first channel which we are trying to explore is LFS and distribution only. Since it gives them a space in a family-owned store. KKC Killer stores being more of men's genre, we have not yet thought of starting it in our own EBOs.
Got it.
इनिशियली हम लोग स्टार्ट कर रहे हैं कि भाई 3-4 स्टोर से पहले ट्रायल करेंगे, बिकॉज वी डोंट नो कि किड्स इज वेरी न्यू फॉर अस ऑल्सो. हम लोग भी 3 और 4 स्टोर से ट्रायल करेंगे, बट वी कैन नॉट से कि उसके बाद ही हम कोई कॉल ले पाएंगे कि हम कितने स्टोर्स ओपन करेंगे. जैसा मैंने लास्ट टाइम भी आपको बताया था कि एटलीस्ट वी नीड 3 सीजन टू सेट द न्यू थिंग. So see, we started in April, so it will take another 1 or 2 seasons.
Got it, Evan bhai. So basically, perhaps by next spring, summer or autumn winter, we'll have some idea. Next year.
It's very experimental ना. अभी जैसे हमने लार्ज फॉर्मेट में स्टार्ट किया है, अब डिस्ट्रीब्यूशन जा रहे हैं. हम लोग ने भी 2 और 3 स्टोर्स अभी ओपन भी कर रहे हैं, ताकि कहीं ना कहीं उसका क्या रिस्पॉन्स आता है, उसके बाद ही कोई कॉल ले पाएंगे.
Got it. Very clear. Thanks and all the best for coming quarters.
Okay, thank you.
Thank you very much. The next question is from the line of Aijaz Lakhani from Unifi Capital. Please go ahead.
Yeah, hi team. Thanks for the opportunity. Pankaj, my first question is that if you look at the non-retail, decline, which is effectively MBO and MBO largely, could you just speak about what happened in that channel there and any color more on the MBO channel?
Hi, it's generally the MBO responds very closely with the market sentiment, and that's the reason I feel the non-retail percentage was lower in this quarter.
Okay. Is it specific to any geography in the MBO channel, or was it a weakness all across?
It was throughout, not related to one particular area or one particular zone.
Okay. And what is the channel inventory levels today? Is there any need for any discounting in the existing stock?
If you see the inventory levels, KKC's inventory level has also gone down. So there is I don't think there is a push inventory or a inventory lying down in the channel structure or in the entire pipeline.
Okay, so what you're saying is channel inventory is very normal, and that restocking cycle can be there once demand picks up.
If you see, अगर आप inventory अगर check करोगे compared to the last year, the inventory is very low. हमने जितनी भी चैनल में भी अगर आप देखेंगे तो इन्वेंट्री बहुत ज्यादा है नहीं, तो मुझे ऐसा लगता नहीं है कि ना अभी क्या है, वी आर वर्किंग वेरी नियर टू द सीजन, तो वी आर ऑल्सो नॉट बिल्डिंग द इन्वेंट्री.
Got it. तो आप बोल रहे हो सर कि as demand picks up, channel inventory will pick up and that will help our sales.
And we don't have any excess inventory की जहाँ से कोई pressures आवे इस discounting का.
Got it, sir. और सर क्रॉस में मार्जिन कितना था from an EBITDA perspective? Is that possible to be disclosed or shared?
So we work on a 15%, 14 to 15% EBITDA.
Okay. And Mr. Punjabi, is there any scope to improve that to KKCL's level? And if yes, what are the levers for doing that?
We have just actually got into this partnership, so there are a lot of levers actually. So one is we'll have economies of scale. So my purchases, my cost of production should go down. That is the first lever. The second is that the MBO network is a higher margin network, which we are not present in at all. In fact, large format stores is the lowest margin network across formats for all brands. For us, large format is 90% of our sales. Now that we get into MBOs and EBOs aggressively, margin has a substantial improvement over the next couple of years, is what we see. So we should be able to at least get close to the current KKCL market.
Got it. And Hemant, could you also share how is the athleisure portion doing? Abhi wo, I think will be in our third full season this year around, right?
ऐसा है कि athleisure is a fashion जो आप जो बोल रहे हैं कि we are not as what the sports brand are. So athleisure is one category for us. And we are doing good. मतलब आप अगर स्पोर्ट्स से कोई भी एथलीट से आप कंपेयर करोगे तो हम वो कम्प्लीटली स्पोर्ट्स प्रोडक्ट नहीं बना रहे हैं. हम जो प्रोडक्ट बना रहे हैं दैट इज फैशन को रिलेटेड, तो वो हिसाब से हमारा ठीक ठाक कर रहे हैं. और जैसे मैं बता भी रहा हूँ कि आगे जाकर आपको ग्रोथ भी दिखेगा.
Okay, sir. And Pankaj, just one query to the opening question. You said that you expect growth. So I just wanted to understand that what you're saying is that you're expecting recovery in the second half for core KKCL revenues, and added on top of that will be cross revenues. Is that the right way to think about the revenue?
That's true, Aegis. I expect that, okay, the consumer sentiment will improve from this month itself. Okay, but we are looking forward that, okay, quarter 3 and quarter 4 would be better.
And even our trade shows, we are getting very good response, because every जो अभी हमने जो ट्रेड शो किया उसमें भी हमें बहुत अच्छा रिस्पांस मिला, तो हमको ऐसा लग रहा है कि बिजनेस आगे जाके अच्छे से बिल्ड होगा और मार्केट भी पॉजिटिव सेंटीमेंट ले रही है.
Okay. और सर ये ट्रेड शो में भी क्रॉस वाज डिस्प्लेड as KKC's brand now.
Yeah.
Okay, got it. All the best.
Okay, thank you.
Thank you very much. The next question is from the line of Lakshmi Narayanan from Tunga Investment. Please go ahead.
Thank you. It was the inaugural question. Sir, earlier you had mentioned that we would actually grow in double digits. Now, last year cross closed at around 176 crores or so. So that anyway would give you a double digit growth, right? Because if you're including the inorganic, it's already double digits. So, excluding that, what is the growth you expect on the killer easy Lawman and PHC portfolio?
On the organic level, we'll be growing. Okay, since quarter 1 was muted, quarter 2 we estimate it would be flattish, and quarter 3 and quarter 4 we are expecting there will be a growth perspective. So overall, there will be a single digit growth on the organic level. With on a consolidated revenue, it will be a double digit growth.
At a cross, what percentage of cross sales in either volume terms or revenue terms comes from discounts, and how much is full price?
So our discounting on the tertiary, as in on the secondary sales, the sales on the counter is around 15% for the year. On our books, it comes to around 9%. So we don't discount that heavily.
But for the cross brand?
For cross only is what I'm saying.
And for us? Well, I'm talking about the X cross, which is essentially the old.
On KKCL levels, fresh sell-through is close to around 60%.
Sorry, sir?
See, sometimes it is between 60 to 65% बैठता है. कभी winters अगर अच्छा हो जाता है तो discount कम हो जाता है. If the winter is not supporting, then थोड़ा discount बढ़ जाता है. लेकिन in between 60 to 65% हमारा sell through बैठता ही है. Fresh sell through बैठता ही है.
Got it. And what is the mix of sales from the EBOs and MBOs for the quarter?
We generally give a mix of retail and non-retail. So quarter 1 FY'25 retail was 45%, non-retail was around 55%.
Got it. Thank you, sir. I'll come back.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
Sir, 2 questions from my side. First is on the LFS format. Are you seeing some pressure from a particular retailer where the push-throughs or the buying has been lower?
Buying has not been lower on the LFS channel.
So we have actually grown at the LFS channel level also?
Been flattish.
Okay. So the MBO decline has been much steeper than the reported number.
Non-retail performed lower.
Sure. Sir, my second question is regarding the alteration of the MOA of the company for real estate development. If you can just highlight what is the opportunity in this, how many square feet area we have, and how much time can we take to monetize this land?
Ankit, it's too early to comment anything on the real estate provision perspective. We're just looking at unlocking the potential of the real estate, and we're still exploring that idea.
And will it be done on our own through a partner where we could sell the land also?
It's on the concrete level as of today. Can't comment anything on that right now.
Sure. So second question is on your A&P spends. You have done tie-up with the Indian cricket team. Is that continuing? And this year, do you see, given the muted demand, your A&P spends can be lower in the year?
Ankit, that was one-time opportunity which we got. Okay, but if we get any opportunities during this period also, definitely we'll look at such possibilities.
So we will maintain our A&P as a percentage of sales or in absolute amount?
Sometimes, Ankit, it's more of a deal buying structure which happens close to the event. So I'm not too sure whether it will happen, it will not happen, or will it happen related to cricket or something else.
Okay, it's not a 5-year deal, it was just a one-season deal which happened last year. Understood. Thank you so much. I'll come back in the queue.
Thank you very much. The next question is from the line of Drashti from ThinkWise. Please go ahead.
Hi, sir. Thank you for the opportunity. So what has been the SSG decline for the quarter, or like SSG growth for the quarter?
On the retail level, on the tertiary level, it has been negative to close to around -10.
Okay. So we have almost added 52 stores in the last 15 months. So when do we start seeing the benefit of this? Because despite that, the retail growth has been negative 10%.
Retail was very close to the market. So as soon as the consumer sentiments pick up, I feel, okay, the scenarios will change there on that channel.
Yeah, but so despite adding 52 stores, we would have got benefit of these 52 stores also, which were not there last year, which is why I'm asking this question.
Yes, the stores have been added up, okay, but the stores added up has not actually contributed to the overall revenue of the EBO channel, which we expected.
Okay, sir. Thanks.
Thank you very much. Ladies and gentlemen, before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Hi, this is Shinjana, Pawan's colleague. Thank you for the opportunity. I had a couple of questions. So one is that the cross integration that could be completed by next quarter. When is that correct?
Get consolidation from this quarter itself, which is quarter 2.
So in quarter 2, so it will be consolidated. Its cross numbers will be reflected from Q2 onwards.
Not for the full quarter. Not for the full quarter, but it will be consolidated from quarter 2.
Okay, understood. Also, would it be possible to give some sense of what would be how has our core segment, denim segment, has done in this quarter, year-on-year basis? Like what has been the cadence like?
On the revenue front, denim has performed absolutely flattish.
Okay, understood. Next question is on Junior Killer. For Junior Killer, what are the price points like in jeans and t-shirts and shirts? Can you give some sense on that?
T-shirt is started from $7.99 onwards, $7.99 to maximum $14.99 or $15.99. Jeans is started from $16.99 to $2,299. And cargo started from same 1899 to 2299.
Understood, sir. So also, do we internally have any target for Junior Killer that we aim to reach this year, or we don't think of it like that? We are just trying to see what traction the company.
Internally target, ma'am, but actually, see, it is very new for us also, and we are launching in this April only. So we are right. Just having 2 months for the last quarter was very slow. So if I have the order in my hands, It will take 2 to 3 seasons. See, even the last Concall also I said कि it will take 2 to 3 season to set any goal.
Understood. Okay, fair enough, sir. Just one last question. So in this quarter, based on the volumes that you have shared, so it looks like the apparel volume degrowth has been lesser than the overall volume. So I believe it's the non-apparel, which is the accessory segment, where there is a larger degrowth. Is it fair to look it that way? And if it is, then which is within non-apparel, what would be the products, like what would be there in the accessories and all, which have performed relatively worse?
So definitely in the non-apparel category, the volume has fallen much below as compared to the apparel category. But since it's a composition of quantity and value structure on the overall category, somewhere the realization has fallen down, somewhere the mix has fallen down. And non-apparel has all categories, where it starts at a MRP of 99 to a luggage which goes to around 5499.
Right. Understood. Okay, fair enough. Thank you for taking my questions. All the best.
Thank you very much. The next question is from the line of Rajesh Jain from Jinandan Research. Please go ahead.
Yeah. Hi, sir. Good morning. Thanks for taking my question. So, since we have seen a degrowth in this quarter, my question is, I would like to know how long this trend will continue, and also if you can throw some light on the inventory levels. I mean to say, if there is any accumulation of inventory considering the muted season, sir.
So, to answer your question, I said the quarter one was a muted growth. Quarter two, we estimate it would be flattish, and we estimate that quarter three and quarter four would be on a growth channel. Okay, that's first.
Okay.
Second, the inventory levels have gone down on the primary levels, which is on the KKCL balance sheet. In terms of the pipeline, which is of all the channels, I don't think there is an additional inventory lying down, so there will be no need for additional discounting on those aspects also.
Okay, sir. Got it. Thanks, and best of luck for your coming quarter, sir.
Thank you.
Thank you very much. The next question is from the line of Rajesh Sharma from Anand Rathi. Please go ahead.
Good morning, sir. So, sir, my query regarding what are the EBO addition targets this year we are targeting, and another question would be how many Crows EBO we would target, and currently, because the same is mostly available on large format stores, so what would be Crows EBOs that would be added?
We are adding 4 more. In the pipeline. How many for the year? 10 more.
We estimate there are 8 EBOs already, and we estimate there will be 10 more within this year.
Okay,
on the KKCL level, we feel net additions would be around 50 to 70 stores.
Okay, sir. That's all from my side. Thank you and all the best for the coming quarters.
Thank you very much. The next question is from the line of Manas Thakkar from NT Advisors. Please go ahead.
Hello. Thanks for the opportunity. Sir, I wanted to know about revenue guidance in absolute numbers. Would you be able to give for financial year 25?
It's still on estimate, Manan. Okay, as I said, quarter one was muted. Quarter two looks like flattish, and quarter three and quarter four will be on. I feel it will be on a growth aspect. So there will be on the overall revenue structure, there will be growth aspect, but it will be a single-digit growth. On the organic level, including on the consolidated growth level, it will be a double-digit growth.
So, we would be able to surpass our last year's revenue at least?
Yes. This is what our estimate is.
And about the operating margins, operating profit margins, would it be sustainable of 18 to 19% operating profit margin for the year?
Operating profit looks sustainable at 18 to 19%.
18 to 19%. Yes. Okay. Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Arpan Rathod from Insight Advisory. Please go ahead.
Good morning, sir. Just wanted to understand, considering that, we had a muted quarter and we are anticipating a better second half. Basically, this was primarily on account of low consumer spend, which is more of external factors. But what internally we are doing in terms of which gives us confidence that we would be seeing a better second half. So what are the steps we have taken to improve upon the situation?
So currently, when we had our roadshow structure, the spring summer's orders look promising to us. That's one. Secondly, there is no pushback of inventory in the channel. So I think as soon as the consumer sentiment moves up, sales would definitely have a positive impact. And the number of weddings and the festivals looks better and promising in quarter 3.
So are we also working on our inventory in terms of to be ready for the season? How are we structuring? Just to understand that, will there be an inventory build up to cater to the quarter 3 and quarter 4 demand?
It will be more of a just-in-time inventory structure for a current quarter at least.
So my question was more for quarter 3 and quarter 4. I understand quarter 2, as you rightly mentioned, would be flattish.
A little bit build-up happening, but we are not encouraging the build-up of inventory. We're trying to map a scenario where there is a just-in-time inventory built in. Since the production the production facilities in-house, we are trying to adapt if we can do that.
Okay. And secondly, my question is on the quarter 2. Have we seen the extended discounting season or the end of season sale?
It was similar to as what was in quarter 2 last year.
So we don't foresee impacting the margin profile at least quarter 2.
Margin would remain similar of what would have been last year. It was around 18 to 19%.
Okay. And lastly, on the acquisition front, best of luck for the cross acquisition. We hope to see good synergies coming out. But also you in one of your previous quarters, you did mention that we would be on a constant lookout for any other opportunities which come our way. So anything in the pipeline?
Too early to comment on it right now.
Okay, but curiously, which segment it would be? So now that you have kids, you have ladies, you have credible men's wear. So it would be interesting to see which new segment comes in.
So gender-wise, the gender aspects we have tried to capture everything. Then if specialized categories start coming in gender categories or my competitor brand.
Great. All the best. Hope to have good numbers continuing. Thank you.
Thank you very much. A reminder to all the participants that you may press star and one to ask a question. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
I would like to thank once again to all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you all.
On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay, thank you.